Hey everyone, welcome to our real estate chat. I'm here today with the king of credit himself, Elvis Garcia. Elvis is a credit repair specialist with Rejuv8. Elvis, how you doing today?
Good man. Thank you for having me on your show. So I'm, excited to talk about a little bit more into credit.
No, thank you. And thanks again for jumping on here. A lot of people, obviously, credit is such a big thing when it comes not only to purchasing a home, but obviously just in general. Credit is that golden ticket that everybody needs, no matter what it is. Even to do simple purchases nowadays, you need a good credit score, right? It's
Yeah, for
definitely very
sure.
important. But why don't you tell everybody a little bit about yourself, about what you do, your business?
Yeah, a little bit about how all of this started. So with Rejuv8, we've been into it, since 2020. Before that, just to go a little back, my background is really hospitality. So I've done it for 15 years before that. So that's why for me, it's really focused on customer service, very orientated in that service. And then even before that, I'd say 2 years while I was still in hotels, I was still helping friends and family with credit because it's something I like to do. It reminds me a lot of P&L reports, just figuring out what's going on, what's causing it, and just to fix it, right?
Right.
Then, ever since that's how I, started the business, launched it in 2020, really to help out people. Because especially during COVID, I knew that was something that's going to still impact people. And it's still impacting people today.
Right.
What happened back in those times? That's really what my goal is really serve our community and put them in the best position possible.
No, very good points. Thank you. Let's dive right into it. Elvis, can you share maybe some most common misconceptions about credit repair that you've encountered in your line of work, and how do you address them personally?
There's a lot when it comes to misconceptions. And one of the things is that the biggest one is that it's a quick fix.
Right.
And that's one of the things is just, it's the way I put it is that the same way it took a long time for someone's credit to be in the position where it's at, that's not really great. It's going to take some time to get it back on track, right?
Right.
It's not just restoration. There are a lot of, the biggest thing is building credit. How do we start doing that process, right? So that's part of my services. And then also that management, with the current accounts, what can we do with those accounts to help with the process? So that's why for my process in general, credit education is a big piece of it. And that's why I always tell my clients is there's no point in fixing your credit if you don't learn anything about it. So that's, I would say 90% of my job is to really provide education. Every single update that I provide them, what's the next game plan? So that's one of the biggest misconceptions is that, oh, it's, within a, month or two, it should be fixed. I'm like, no, it just depends on everyone's situation. Right.
Right.
So I would say that's one of the biggest ones. So.
Right. No, that's definitely insightful. Definitely a lot of good information there. So, as far as credit score goes, how obviously we know it has a big impact when securing a mortgage, right? So, how does
Yeah.
someone's credit score affect their chances, and what would you say are the good steps that someone could take to increase their credit profile specifically for home buying?
Yeah. And I'm glad you asked that question. So when it comes to mortgage scores, a lot of people don't know this is that the mortgage industry has their specific scores, which is FICO 2, 4, and 5.
Right.
And the reason behind why lenders use those older model scores is because they're more accurate to the mortgage process. Now, the biggest factor to answer your second question is that the biggest factor to those mortgage scores is really two things. It's overall debt and then collection accounts. And then more specific is medical collection. And it's funny because from the mortgage side, anytime that a lender sees medical, they're like, oh no, we don't need to factor that in. But when it comes to driving those mortgage scores up in in a higher position, addressing those is definitely going to have a greater impact. So that's the thing about mortgage scores, is lowering your balances, not just on credit cards, but also on any loans that you could have, right? So that's where I typically recommend clients, especially that when they don't have anything negatives, what can I do? On, let's say, some personal loans or auto loans, pay your monthly. But if you're able to do 100, 200 more on the principal, that's what's going to drive those scores to go higher. And of course, that helps with the DTI, reporting less debt. So those are really the two biggest factors when it comes to improving those specific scores is really addressing any collections and then more specific medical. And then of course, any overall debt, trying to reduce those balances.
Right. No, that's definitely a lot of points. And you obviously touched on my next question was the red flags and common issues with credit when it comes to purchasing a home. But what would you say are some strategies apart from obviously making the extra payment or doing just a little bit more to obviously keep those balances low? What would you say could help someone their score in preparation, especially when it comes to applying for a mortgage?
Yeah. So when it comes, one of the biggest things that is a big driver when it comes to our credit scores is really credit cards, the utilization. And that's why there's some people that really don't like using credit cards at all and don't want them. It's because they're so sensitive because the another misconception about credit, to go
Right.
back to the first question, is that credit cards, when somebody applies and they get approved for a limit of 5,000, the thought process is that, "Oh, great, I have $5,000 that I can use." The answer is yes, but at the same time it's no. Because if you max it out, what's going to happen to your credit? It's going to drop tremendously, right? So the really, to answer the question is that what we want to do is try to keep those balances down to the 30%. The lower the better, right? But as long as we keep it down to the 30% each month, that's what's going to really help to grow our credit, right? Now, if we could do 20, 10% even faster, right? Then you'll have better results with doing that. And of course, when it comes to credit, it's all about time, right? Allowing those accounts to age out. And then if we're doing the right things, then you're going to see the improvements when it comes to doing that. So that's where I always start, right? We want to start at 30%. Now, before we get into a mortgage, my recommendation would be 10% or pay it off. So before we start that process, that's always a good route to start with. So
Very good. No, that's definitely a lot of good, insightful tips and definitely a smart way to approach it. I guess to strive away maybe a little bit more into your business. Obviously, as I know, and I'm sure a lot of people know, not every credit repair specialist is the same, right? Everybody has a different business. Obviously, as I know, working with you personally, you're very legitimate and obviously very well in your craft. So, I guess for people that don't know you, can you maybe walk through your process of credit repair? Obviously, like from your step, from the initial assessment to achieving the tangible results, obviously, that everyone's looking to achieve when going through your services.
yeah. So when it comes to my process, what I include as the free part of the free consultation, I also include a personalized audit report where it makes it really simple to understand, but it notates everything, what's negative, what's impacting their credit. And based on that information is where we'll create a plan of action of what we can do to improve the credit. And then with that, I also include a complete credit analysis. So up to that point, there is no charge on my end. And that's one of the things is that's very common in my industry is that a lot of these companies want upfront payments or large payments. I've seen it from 500 all the way up to 1,200 as a one-time fee. So anytime that any company is asking for that's honestly that's an unethical practice because it even states in our laws that we can't do upfront payments whatsoever. It doesn't matter what state you're in.
Right.
It's just what it is, right?
Right.
So that's why when it comes to individuals that have had bad experiences in the past, I don't even know if I want to talk to you. Look, free analysis, free personalized auto report, and then at least you'll have the information, right?
Right.
And the worst thing that I tell them is like the worst thing that you can say to me is no, right? But at least I provided you the information, you have a better understanding of your credit, and then you could decide how you want to move forward, right? So that's just how I get them started and at least to see where they're at.
Gotcha. No, that completely makes sense. And obviously, once you take them to that point, what I
Mhm.
guess after you obviously are building rapport, you're working with the clients, building their credit, getting them where they need to be. What would you say are some key factors that borrowers should maybe look for when considering certain mortgage products? Obviously, we know there's different mortgage products, different programs out there. What should you say someone should consider when looking for, and how does obviously their credit history play a role when decision making in that process?
Yeah. So when it comes, especially when it comes to credit building, right? And not just from a mortgage perspective, so if they're looking to buy a car in the future or just credit cards, personal loans. That's how I look at it in the bigger scheme of things, right? Is what can you do to build credit? And it's all about adding diversity to your credit report. And that's, again, going back to the initial question, misconception, right? So a lot of people think is just applying for a bunch of credit cards. Okay, that's going to help me build credit, which is true, right? But the way I explain it is, let's say you and I both had a 700 credit score, right?
Right.
And let's say I just had a bunch of credit cards, let's say 5, right? And that's all I had reporting. But let's say you had a credit card, an auto loan, student loan, and a personal loan. So from a bank's perspective, your 700 credit score is a lot stronger than mine's because you're able to demonstrate that you're able to manage different types of accounts versus me. All I can demonstrate is just the usage of credit cards, right? And that's also important when it comes to mortgages, right?
Right.
If all you have is credit cards, what gives us confidence that you can qualify for a mortgage and handle that, right?
Right.
So that's why, like, when it comes to credit, personal loans is always first tier, auto loans is second, because it's a very similar process to mortgages. And then, of course, mortgages, right? Then not you're in the big leagues, right? Because you
Right.
have that on your credit reports.
Exactly. No, I mean, that completely makes sense. And then obviously to touch a little bit on that, obviously the current economic landscape is always changing, evolving, inflation, there's a whole lot of things going on in our market and just the economy in general, to be quite honest. So I guess what advice would you give to people when it comes to that to protect and improve their financial health, even just beyond the credit score aspect?
It's really just about it's all about creating new habits, right?
Right.
Because what I did in my 20s obviously wasn't working,
Right.
right? And applying for things for left and right, trying to get multiple loans, so that's the thing, when it comes to credit is, it's about creating those habits, using those types of accounts the right way, especially credit cards, because loans is pretty cut and dry, right?
Right.
You get a loan, you make monthly pages. It's not something that's ever changing. If anything, all it does is just go down, right?
Right.
But even then, where you want to be careful, and I've seen this a lot where people are trying to get access to money, right? So they're getting loans here, small loans there. So that's the things that you want to avoid is getting into those small loans, because a lot of times there's companies that will offer, hey, $1,000 loan today, you'll get that money today. But what they don't really emphasize is the interest rate, which is pretty high sometimes, right?
Right.
So that's where sometimes somebody can fall into that, where like, oh, shoot, why is my payments going higher than it's supposed to, especially when it comes to credit cards, is because the interest rate is so high. And at that point, they can't make the payments. And then there you go, recent late payments, score starts dropping. So those are the kind of things you want to be careful too. And then the same thing when it comes to like credit cards, there's a lot of credit cards that, do no credit check or, anything like that, but rates are high as well,
Right.
especially with those small credit card companies that, like you've never heard of, but, oh, they'll approve you for 1,000, but then, the interest rate's at 40%.
Right.
So those are the kind of things that you want to avoid is that, getting small little loans with high interest rates, and then same thing with credit cards. That's where they get you at.
No, exactly. And then honestly, to touch on that, what you're saying, obviously, as you've seen in our industry and in our business, there's a lot of emergence technology and trends out there, right? That's really going on right now. Obviously, we have the pay for here, different type of programs like that. That's really going on right now, just to get people more involved in credit more than they used to in the past, even in the past 5 years or so. How do you see, because we're seeing more and more of these type of programs coming out, how do you see that impacting the credit repair, the credit industry? And what do you think? How do you think people can leverage that and changes to their advantage?
So with those, there's a lot of new fintech companies that are out there coming out to help people with credit too. And when it comes to the pay here, pay later, or something like that, right
Right.
here, pay later, those are the
Exactly.
kind of things you want to be careful with, right? You want to look into those disclosures and all that. The interest rate, if anything, those are high, right? Those are good things to have, right? And that's like when you're new to credit, especially when you're a teenager, you're trying to establish it. The first two things that people start off with is like a secure credit card or like a JC Penney card, a store card in general,
Right.
right? So those are always a good ways to start building credit in that sense. So when it comes to that, it's just about, again, creating those positive, good habits from the very beginning, right? Making sure, consider the 30% utilization when it comes to those loan types of plans,
Hmm.
making sure that you're able to make those payments. Because if you already know off the bat it's going to be like $300 a month,
Right.
and you're trying to rent it out now, and you don't want to get into that, because at that point you're just gonna eventually, probably in the first second month, you can't make the payments, and now your credit is impacted with a 30-day late payment, right?
Right.
And then with payment history, all it takes is one 30-day late payment to drop your scores up to 110 points, and that's all it takes. So that's where you want to be careful with those kind of programs out there. So
No, exactly. No, definitely. That definitely makes sense. And like you mentioned in the beginning of our little interview here, you've been doing this
Mhm.
for quite a few years now. So can you maybe share like a little success story or a memorable experience when your credit repair services not only improve someone's credit score, but also transform their overall financial situation? Even talking about how maybe it led into successful homeownership or just a positive situation in general.
Yeah, I'm actually going through that right now. I have actually, last year I was helping a client to get qualified. It took us about 5 months, 5 or 6 months, right? Because they just had a lot of heavy stuff. But they were so happy with the process that they reached out. Maybe it's been 4 months ago, to get their husband, in the right position, because now they're trying to buy a second home. And now the daughter is trying to buy her home, but she has some few things, that she wants to fix on her credit. So I think that's, for me, that's always makes me happy in that sense, because now they're getting their family involved just because of the experience they had with me and providing that service. That's really my focus, is providing service, which I bring from hotels all these years. So that's when I'm able to help one person to get into their home. Now they want their whole family, brother, sister, like, hey, help me out to qualify your home, and they're ready, right? And that creates opportunity for me, partners like you, because they're coming in just with the credit. So once they're ready, I'm gonna say, hey, I got Eric. He can help you from the real estate side to find your home. So that's what I love about what I do, is because especially when they don't have that connection with a mortgage lender or a realtor, say, hey, I got the right people. Especially if we're depending on where you're looking in Central Florida, I got somebody for you. So that it's like a full circle moment where I help out their family and connect them with great partners of mine.
No, exactly. And I must say, I definitely appreciate our partnership together. We definitely have been working for a little bit now and help a lot of our clients along the way and getting them to a more successful position in place. So it's definitely been nice. And definitely, I've been appreciative, but I know most importantly, our clients have definitely been appreciative of that. Just one final question here before we wrap up for the day, Elvis. Just to let people know, obviously, what should they look for when choosing a reputable credit company such as yourself, Rejuv8? Like, what sets your approach apart from the others in the industry? Obviously, I know you touched on that earlier, but just to summarize it here for everybody before we end.
Yeah, and I'm glad you asked that question. And these are the things that you want to, avoid, right? You always want to shop, not just, because, it's just me and, a few people know me, but you want to, I always encourage to look around. So one of the biggest red flags out there is anybody that offers anything, any type of guarantee or credit sweep in general. So that's really the biggest red flag out there, is that anytime anybody offers credit sweep, is all what they're trying to say is that they're going to remove if not everything, but everything negative from their credit report. And a lot of times they'll guarantee that it'll happen within 30, 45 days. And that's, again, in our laws that are governed in industry, is something that we really want to steer away, because what they're doing is they're going to ask you to do a false police report. That's something that they'll include on the dispute. And then credit bureaus, by law, they have to remove all of that negative item. Now, what happens when we're credit sweeps, and this is where you want to watch out with one-time fees. Oh, we'll charge you one-time fee and that's it. We'll take care of everything from there. What happens at that point, when the credit bureaus remove it within 30, 45 days, the client is happy, everything's good, they're scoring on the 700s. Well, what happens in that process is that the credit bureaus want a response and backup to what they've disputed, right? They
Right.
need backup to their claims of identity theft or whatever it may be that coincides with the police report. Now, if there's no response in that to the credit bureaus, they're going to resubmit all those negative items to the credit report. And what most people experience is that they'll try to reach out to the agent, to the company. Nobody responds. It's because they've already got their money, right?
Right.
And they basically disappear. So that's where I've encountered a lot of clients, currently or in the past, where, they were even hesitant to talk to me. It's like, because, hey, I've had a bad experience. They wiped everything clean and then it all came back. And the worst part about it is that I've had some clients that they were in the mortgage process, say they went back to the lender, say, hey, look, my scores are great. They pull their credit, and then closing date happens, and then everything came back on and they couldn't close. I was like, oh my gosh, like that's the worst,
Yeah.
from all ends, right? So that's the things that you want to really steer away, is anybody that offers credit sweeps or any types of guarantees. And then if you're looking for a reputable credit repair services, if they include a free consultation, a lot of them do what I do, is a complete credit analysis and an audit report. If they're offering that, then you're dealing with, an ethical company, right?
Right.
So not saying that's just me that's doing it. There are out there, companies out there that are doing it the right way, but unfortunately it's not that many. So those are the kinds of things that you want to look out for. So
No, I honestly completely agree. And that's why obviously we've partnered together on a lot of deals and definitely looking forward to more of that in the future here. But Elvis, once again, thank you for coming on here. I really appreciate it. I know everyone that's tuning
of
in
course.
is also very appreciative. A lot of people have asked me about some credit questions and when the next episode was coming out of my real estate chat. And obviously, I thought it'd be better not only to have the king of credit himself, Elvis. So thank you once again, man. I really appreciate it. Thank you for everyone tuning in. Our information here is just going to be in the bio down below. So feel free to reach out. You have any questions, me or myself and Elvis, happy to help. Happy to get you guys to the next step. Thank you, everyone, and see you soon on my next real estate chat.
Thank you.